Hello everybody. Welcome back for another video. Hope you're all doing well. Hope you're all doing fantastic. And that you're all having a great day. And without any further ado, let's jump right into it. I know that the screen looks a little bit weird. This website, I tried to reformat it multiple times, like changing the size and moving things around. If I made it a little bit smaller, the chart disappears. If I made it any bigger, the words kind of... You ever seen someone who has like on their phone, like the text size, like, you know, at the absolute maximum, and there's just like 3 words on the screen at a time? That's what this also ended up looking like. So this was the best that I could literally do. But I do like this, and I'll explain exactly why. In the quest for figuring out where cryptocurrency prices are going to go, we have a brand new chart. What? Yeah, crazy, right? So as I've mentioned thousands of times before, I keep seeing all over the internet a number of different charts as to where people think Bitcoin's price is going to go, where it's come from before. And I always personally care for like past historical data as an indicator as to where things could actually go, all listed together. I've seen a couple of people listing charts where it's like, well, the last 3.5 months, Bitcoin did this, and therefore the next 5 years will be that. And I'm like, well, that's not really gauging actual numbers or like actual logic. A couple of things that we have seen, especially on the channel over the years, that I like really pay attention to are patterns. I don't know why patterns really get me. Maybe there's something in my brain, I'm not exactly sure. But I love seeing that even over the course of the last couple of, last couple of cycles, we tend to see like these patterns reemerging. And I mean, it goes anywhere from people hating the market, people liking the market, people loving the market, people investing in things that they shouldn't be investing in. Remember I told you years ago, this was a crazy, crazy story. And I mean, none of us knew what a market cycle actually meant back then. So, you know, I remember in 2016, almost no one was into crypto. I was trying to tell people about it. People weren't that interested in it. 2017 came around. People began to look into the market. Prices were going up. And what we now know as a market cycle end top indicator, I remember I had a family member who told me that I was telling them about crypto. They weren't into it, but they, you know, whatever. And I was the only one telling them about it. And at some point they told me that they went into a store, and as they were like checking out, the person was like, "Oh my gosh, like, do you know what ripples are?" And that family member was like, "What?" And they came back to tell me. So, I mean, without having to have a long story, for those of you who don't know, a market top indicator is, you know how like you're in the market. Got it. You may have a friend who's dabbled in the market. Cool. If you hear from a 72-year-old woman at the counter as you're checking out, if you own any XRP or if you own any Bitcoin, that means that like it's spread too far into retail and it's time to exit the market. It's a really, really, really weird thing. There's a story also of this guy years ago. I'm sure you can find it online. His name I don't remember. Where this guy, he said he was in New York and he's like doing something with crypto. Blah, 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 blah. And at some point he said he got into a taxi and someone was like, they asked him what he did for a living. He said, "I'm in finance." And he said that the car like almost stopped and they started giving him advice in crypto. And that's the point where you always know like, okay, like it's, you know, like we've reached peak insanity, and even the cab driver is trying to tell a guy and not knocking the job, but you understand the idea of it. And I saw this last cycle before, where friends and family who were, I mean, no form of finance, they were not even remotely into it. I had my aunt asking if she should buy some Bitcoin, and I was like, oh, that's not a good indicator. So this chart, someone called it the rainbow chart, and you'll see, like, it actually makes a huge amount of sense, and I really, really like the way that it's even laid out. For those of you not looking at the screen, it is literally a chart with a rainbow on it. It follows Bitcoin's price from the very beginning all the way to basically where we are right now, and every line of the rainbow is color-coded, logically, but they indicate something completely different. Either we are at the point of everyone doesn't care about Bitcoin and everything's really sad, to the top of it where it's red, where basically it says that we are in bubble territory. And this, we are and have been completely within, this is what I'm saying. When I talk about these charts, we have been completely, except for like sometime in 2013, completely within this boundary, which I think is very interesting. Even you can even see the bottom of this current cycle right here did not even go outside of the last color, which also is like a huge indicator for a chart like this. We are currently in buy. That's the current indicator that we're in. The one from whence we just came from a couple of weeks ago was Bitcoin is done for. The blue was Bitcoin is in a fire sale. And then we managed to go up to the accumulation level, and now we're back in the buy line. It goes from there to accumulate to still cheap. Yellow is like hold on for your coins. Orange is the disbelief area. It's called is this a bubble? Because we see that, the prices are going up, but everyone's like, is this it? As we've been there many other times before. The next one is FOMO intensifies, and then it goes up to sell. Seriously, sell. No, like this is what it says for those of you not looking at the screen. And then the bright red at the very top is the maximum bubble territory. There's another chart, and I'm going to try and find it as well. My friend sent it to me. I have to dig through all of our messages. It was a chart that was similar to this, but it was more tight. It was like, it wasn't this spread out. It was kind of like a dip and up and down. Was it called RSI? I don't know if that was it. It was a chart indicating the actual like movements of the market and how many people were into it and how like overheated everything was. And it's also been extremely accurate every single time. And he showed it to me recently, and like we're basically at the bottom of the barrel. Like we're not even remotely in any area where the market's kind of overheated, which I also thought was very funny. Seeing a lot of times on Twitter, people were posting like the fear and greed metrics, and I was like, most of their charts were always in greed, and I was like, do you not feel the sentiment in the air? Like everyone's like really down because we're not above $100,000, but all the charts were saying that we're in like a greedy area, and I'm like, no, not even remotely close. The only like weirdness in the chart, we go beyond the red of maximum bubble. In 2013, 2014, we hit red as well during the 2017 halving. But in the 2020, 2021, we don't do it. And I've seen, not so much anymore. I think a lot of the people who were naysayers, if you will, have more or less left the market. Like the whales have done exactly what they planned on doing, and they flushed, a huge amount of people out of the market. A lot of the naysayers, especially people who left the market, got back into it, or are currently into it brand new, they see a lot of the charts and they see that we didn't go over 100K in 2020, 2021. And it's weird that you have to like mention or remind them like what was going on in the world and how terrified people were, like even like financially. It doesn't even have to be physically. Like from a monetary perspective, do you remember all the offices that were closing, all the people who were losing their jobs, all the people who were losing their homes? Like everyone went into hyper saving mode. Like I don't even spend a lot of money myself. Like I tend to save and invest, but I also went completely into like, I was, who knows what's going to happen with money? Like everyone had no idea. People were getting like a $1,200 stimulus check and then got a pat on the head like, well, good luck. That kind of like no one knew what was going to happen. So any idea that this market would do exceptional things wasn't really in the minds of a lot of people. Do you remember like the stock market also collapsing? So yeah, we'll see what this cycle brings. A lot of people are very optimistic. It is, it's really a wonderful, nice thing to see. that regardless of all the movements, regardless of what might be happening, or the accumulation levels continue, I mean, in an unprecedented manner. For those of you not looking at the screen, it says Bitcoin whales quietly buy $439 million in Bitcoin while a market panics. Anytime that there's a drop in price, anytime there's some kind of a panic that keeps hitting Twitter and online, I do personally believe that a large portion of it is people trying to get other people afraid. You can disagree if you want. I've been in the market for a while and I've seen how other YouTubers work. I've seen how people on Twitter react to things. It's meant to get some kind of engagement in many different ways. And a lot of times if prices drop by 2 or 3%, if we get any news of outflows from the ETFs, the internet goes ablaze almost immediately, talking about, oh, you know, it's going to be a red day, prices are going to drop. And I mean, some of these people sometimes they'll have like, 80,000 likes on something. They have, millions of people looking at their posts, and it has an effect. If you make other people afraid, they make other people afraid. People sell off. It becomes a weird self-fulfilling prophecy from these people who got other people afraid, and they go, see, told you there was going to be a sell-off. The issue once again is, and has been for as long as I've had these channels, is that the moment you sell, whales buy. Shorten the history lesson. In this space, in finance, in the world that we live in, rich people are currently in a hyper accumulation phase. And it's for all assets. It's for stocks. It's for real estate. It's for crypto. You name everything here and in between. The art market is currently down. The comic book market, the card trading markets are also down, but you're seeing like not record sales, but record levels of accumulation of these things as well. As I mean, like some Banksy prints right now are down by 15 to 20%. You look online, they're gone. Even as prices have dropped because of this interest rate squeeze area that we're currently in. And the same thing is happening for crypto as well. So if you are getting indications, and I mean, even if you want to look at the rainbow chart or any other metric, indications that Bitcoin is at some point, it doesn't have to be this cycle, doesn't even have to be the next. If rich people have to wait 8 or 9 years to buy an asset for $60,000 that goes to $1 million, they have the patience. They know that they slowly accumulate because they know that whatever they have will grow in value. And should they pass, it'll simply go to the next generation who will always continue to accumulate as well and also become richer. So there's constantly a flushing out. I was just chatting with someone about that. We see the flushing out happening in all different asset classes. It's happening really rapidly in housing as well, but in crypto, as we are a brand new market, it's far easier to terrify people, squish them out of the market, make them think that the market's not going to come back, and it's the same loop over and over. For those of you not looking at the screen, if you actually look, 2024, the halving line is right here. Here's 2025. If we end up getting to the red peak, it shows Bitcoin going over $500,000. It's still a smidge away from the million, which would be starting right around here in 2027. But at that point, if we do hit around here, it does then solidify the idea of the $300,000 to $500,000 Bitcoin. I'm not holding my breath. We need to see what happens this market. We need to see if the interest rates end up going down. We need to see how people are feeling about the ETFs and the accumulation and the potential outflows and the Ethereum ETFs and all these other things bundled together, because the market works as a whole. And especially as we're seeing the stock market, sometimes didn't it just hit like a brand new all-time high quite recently? A lot of the indicators are there for like a movement upward. But if we do go up here, this does indicate that there will be a drop. But then by the time we get over to 2028 again, I mean, it's crazy to think about. I think it almost feels like the word's not a fairy tale, but can you imagine the idea of a $1 million Bitcoin? One of my really close friends, who I meet up with quite often, he's one of the friends I always tell you, we're like, hey, how's it going? So did you see the market? Like, we like immediately start talking about money. He mentioned it before and he was like, you think about it, or it's kind of like you buy property or you buy an asset and you kind of like imagine it going up in value. You buy a home, 200K, 300K, and you imagine it going up to $500,000 to say that you own a home or a property that is worth $500,000. And he was like, imagine getting into Bitcoin like right now. Get into the market, you buy some crypto, and then at some point the thing that you're holding is worth $1 million. He was like, that's a crazy, insane thought to think, because what happens to all the other altcoins? And then like you get that like backwards FOMO kind of thing where you're like, why didn't I buy more? Why didn't I accumulate? I mean, it happens for every single asset class. It's just always like a bit of a shame, and like it actually ends up hurting at some point. I don't know if anyone else has this thing where you look, and I without having to dig too deep, I accumulate a lot of things. Like I love assets. I love buying different things. But I've sat there sometimes to myself and like, it's a really, and please don't do this. I've sat there a lot of times, like I've almost like beaten myself up over things. If I buy a piece of art and I see that the value goes up over like the course of a decade, I'm like, oh, why didn't I buy more? And it's like, at least you have one. Like at least you were able to buy that one piece. But I think the mind doesn't work that way when we realize that like we could like, the word's not extrapolate, but could have expanded so much further our wallets and our portfolios if we had just kept on buying more. But I mean, that works for everything. You know, you can buy some crypto right now. The price does a 10x. You know, we're always, oh, I wish I had bought more, but at least you bought some in general. Yeah, I actually like this chart. I couldn't find the creator of it anywhere. I see on the corner, it says blockchaincenter.net. I assume it has to be them. Nowhere. Okay, yeah. It even says source blockchain center. Throughout the entire article, I couldn't find a name, so I guess it had to be made by a company. I'm going to try and find the other chart as well that I was telling you that my friend showed me. So we can do like some comparisons and see exactly where the market currently is. But I like this one a lot. Let's see where we end up going. Let's see that the whales continue to accumulate. It's a weird time in history. We're seeing money morph in front of us. We're seeing the potential of the cryptocurrency market taking over everything. I still think we're at the doorstep of this world where wealth is mainly in part digital. I just saw something. It was a French documentary. The YouTube channel was called Arte, A-R-T-E. You can definitely find that. I don't know if it's going to have subtitles in English. It should, maybe like closed caption. And it was a documentary about the NFT market and how like it's coming back and like it's surging. But a lot of the sales that are happening are mainly from whales who are accumulating as prices have hit these like crazy lows. Yeah, no, really, really interesting time to be in the markets. Yeah, that's the Bitcoin rainbow chart, and whales buy every time there's a dip in price. And yeah, let's move on. Also in the news, where is it? There we go. Ripple has launched a brand new product. It makes a lot of sense. It is called the XRP LEVM sidechain. A number of years ago, one of the most popular topics was interoperability between chains. The idea was you'd be able to swap. They were called atomic swaps. The idea was you'd be able to swap your XRP for your Ether, for your Litecoin, for your Bitcoin, like that. Somewhere on chain, there would be a mechanism that would allow you to swap assets easily whenever you wanted to. You go into a store, you see they only take Litecoin. You take out your Bitcoin wallet, hit atomic swap. It swaps it into Litecoin as you're paying. This was the idea. A lot of that has kind of disappeared into the background. As I heard before, it's actually incredibly difficult to do. So what emerged from that phoenix, I guess, was the idea of side chains, and more so the EVM side chain. As Ethereum is the most used blockchain on the planet, has thousands of coins on top of it, people realize that one of the easiest ways to get people into a project or an existing project is to either build on top of Ethereum and or create a side chain for your chain that allows people to do things that they would normally do on Ethereum on your chain. You get the idea? So this became popular years ago when people realized that they could wrap coins, essentially putting one coin, the value and metrics of that coin onto another chain and transacting there. So if XRP does, I think it's over 4,000 or 5,000 transactions per second, and Bitcoin only does 3, you'd be able to lock up Bitcoin and take the value of Bitcoin and have a wrapped Bitcoin, as it is called, on top of the XRP blockchain and transact with it there, in real time, really fast. And at the other end of the transaction, you'd be able to unwrap your Bitcoin and deal with it again on the Bitcoin blockchain. That's one of the ideas. And this is why we're also seeing, and have seen for a long time, a lot of Ether locked up in other places. So Ripple has launched their own XRP Ledger Ethereum virtual machine sidechain to basically allow people who are developers, if they want to build and they want to do stuff quickly, they could extract the same value and be able to do it on the XRP blockchain as well. The article is a bit sensational, so I won't really read it out. It says drop the game changer. This innovation has DeFi developers buzzing, and it's okay, no one talks like that. So basically it allows the two chains to kind of lightly merge, if you will. As the discussions around DeFi continue to increase, regardless of what we've seen already for DeFi, a lot of people still believe that decentralized finance is the future. You hear it on CNBC, you hear the what's this guy's name? The CEO from Coinbase and all these other people, they'll talk about Bitcoin's price, where the market's going, and at some point they always make sure to say, well, we believe in DeFi, and this is going to happen for DeFi, and DeFi is going to... So the idea is that decentralized finance may still take over the world. I do remind you to be cautious, because last market cycle, DeFi was everywhere, and a lot of the DeFi wasn't DeFi at all. And a lot of these projects got rugged because they weren't decentralized. It was, and I said it again, it was literally a bunch of people sitting in an office writing on Twitter that they had this many nodes, that they had this many this, that it was this decentralized. The project was worth several $billion. They extracted all the money from it, and then these people disappeared. Just saying. So now we have the idea of DeFi being on top of XRP. It's very similar to the idea of putting other coins on top of a blockchain. If Ethereum is valuable because you have thousands of coins on top of it, then do the same for Cardano, then do the same for XRP, then do the same for Bitcoin. This is why you keep seeing, or have heard before, of Bitcoin having NFTs. People are talking about putting, stable coins on top of Bitcoin. The more things you have on top of a chain, the more value that's locked inside of it, the more valuable that it ends up becoming. So, as Ripple is getting ready to potentially end the lawsuit, and they're getting ready to go public and launch their own stablecoin, this seems like the logical next step of also in the idea of decentralization. If you have a decentralized chain on top of your chain and people are running DeFi on top of it, mathematically, your chain also then becomes more decentralized, what have you. We'll see what ends up happening. There's a lot of hype around this. It says opening doors to Web3, which is still a huge topic. What's XRPL EVM sidechain is basically exactly what I told you. You'll be able to wrap XRP, called EXRP, and basically allow people to be able to transact on the XRP blockchain with value from Ether, regardless of what that actually might be. Yeah, cool. Nothing wrong with the news. It's just more of a, I think we're in that time frame where, as it looks like, the market could potentially skyrocket to brand new all-time highs. A lot of projects are like releasing news about things that they're going to do, or the upgrades or updates and things are, you know, all those kinds of, hey, we have a million things coming to our chain. It gets people very hype. I will say one of the standout features of Ripple, the company, tends to be that what they say they end up doing. So we've seen over the years, they say that something's going to happen, and unlike other companies or other chains, they end up doing it. It's now more of a, when this launches, how many people will actually use it. Yeah, that's the Ripple has launched or is launching. Okay. An Ethereum side chain. Let's see if it works. And yeah, let's move on. So this was by far one of the most spoken about things within the space. I'm not going to burst your bubble, but I'm going to tell you what I think exactly what it was. So Cardano recently had a DDoS attack, a distributed denial of service attack. Usually people just call it a denial of service attack. It's basically where you spam a blockchain or a website or a system with tons of transactions, basically trying to clog it, making sure that nothing can go through it. So you'll sometimes see, or you've seen before, if you try to do something on a website, you know, tickets are dropping at 7 p.m. or this thing that you can buy is happening at 5:30. You go to the website, it's not working. It's basically because the railway that they had got too clogged really fast. It can seem like it's a DDoS attack if people are going to the website at the exact same time, or it can actually be a DDoS attack where someone goes, I don't like that website, and they try and spam it as much as possible with a whole bunch of different things. And then the website breaks for a little bit until the DDoS attack ends up happening. So Cardano recently had a DDoS attack, and I'll tell you exactly what I think that it is, and it's nothing bad. Don't worry. This isn't like a negative take on it. A number of years ago, it was quite popular to actually DDoS blockchains. Why? Because during the blockchain Olympics, everyone kept on touting how quick and how fast their chains were. So Bitcoin has 3 transactions per second. Back then, Ethereum had, I think, 5 to 7, or some also low number. I think, what was it? Litecoin didn't have that many, Bcash, whatever, you know, you get the idea. So nearly every couple of months, it would enter the news that a blockchain was currently being DDoS attacked or had a whole bunch of transactions being pushed in. If you can only handle so many transactions per second, someone would try and do 20x that and basically clog the blockchain. The news usually always ended up being someone tried to DDoS Bitcoin. All that happened is that Bitcoin's transaction fees went a little bit higher for like a 6-hour period. Then they ended up going down. Someone tried to DDoS Ethereum. It didn't work. Someone tried, transaction fees went up. I think we had multiple DDoS attacks against Bcash, a couple against BSV. I think maybe 1 or 2 against Litecoin. Tron had a couple over and over and over. The majority of the time, what these DDoS attacks actually were developers of, now once again, this is not negative, were developers of the project DDoSing themselves. Why would they do this? Why would they try to destroy or slow down their own blockchain? It was to show that they couldn't destroy or slow down their own blockchain. It was usually done as a bit of a publicity stunt, if you will, where if you're not getting good press, if you're not really in the news, if no one's really talking about your project, You want to be able to show, hey, look how resilient we are. Hey, look what we can do. Look how fantastic our chain actually is. We haven't been in the news. We just got attacked. And to show how amazing we are, look at our chain is still up and running. And this is what I think happened with Cardano. You have to understand, there's a lot of money at stake when it comes to these projects. And if you have a multi-billion-dollar market cap, you want to be able to show investors and other, like, it also happens through investments as well. Understand that. A lot of the times years ago, when you see these larger companies getting into the space, it's because they've stress test a lot of these chains themselves. They've made sure I'm not putting in $300 million as a company, and my other three friends aren't doing the same unless we know that our money is safe. You have to have people testing the chains to be able to make sure that if your money is inside of it, if it's locked inside of it, you can get your money out. You can do this with the chain. Stress it as much as you possibly can. I don't mind paying $138 in transaction fees as long as my $300 million is safe. It's that kind of thing. So apparently, this was done by someone trying to do 194 smart contracts in one transaction. And apparently over and over and over and over. It was in the news that apparently they were trying to staked Cardano. And that also was not unstaked. I told you all before, Cardano actually works as a blockchain. In the I keep saying earlier days, in 2017, 2018, we had a lot of developers who were stress testing these chains on purpose. So we would get it either in the news that there was a DDoS attack on a chain and no one would come forward because it was meant to be like, oh no, who did that to our chain? Or a week or two later, we had developers say like, no, it was us. We were trying to make sure that the chain was actually working. And that was one of the issues with IOTA, is people were trying to stress test the chain and people were like, this chain doesn't work, or this tangle doesn't work. It's not an actual feature. We had years ago people testing Cardano. Developers came forward and they said, no, Cardano actually works. The issue is like actual adoption of these chains. They need more people and more companies developing on them and also putting more money and investing, what have you. So I don't know for certain. This is not me saying this happened. The way that it unfolded was more like a breaking news kind of thing, where like you're watching the TV and someone goes, oh my gosh, it's raining outside. Will there be, like, it was one of those things, talking about a hurricane. No hurricane happens. And then everyone's like, oh, whew, thank goodness there was no hurricane. Like that kind of feeling. I think it's mainly Cardano trying to get back into the news. If this was not done by a team member or someone part of the team or even someone who likes Cardano, I tip my hat in your direction and I apologize. But it felt very fabricated from the other things that I've seen before, which isn't a bad thing. If you need to show the public that your chain works, if you're not getting a lot of press and you need to show developers that X, Y, and Z is happening, if they're having a discussion with some rich person behind the scene who's like, do it, try and take the chain down, the chain doesn't get taken down, you've proven to the rich person, cool, thumbs up for you. But a DDoS attack on Cardano was like a little bit like left field, kind of like who would be performing a DDoS attack on Cardano? Cardano's not in the news. And there's so many other even larger legacy chains that you could definitely try to dismantle. But as far as we've seen, the only database that continuously fails this situation has been Solana. So, yeah, don't forget, remember that one year where it went down 13 times and people were still like, Cardano's the bomb. Let me keep using it. And I'm like, no, that's not. No, it's, so yeah, that's the Cardano news. Very popular. This was really like a, what do you call it? Almost like a weird celebratory kind of thing where like it happened, it passed, and everyone was like, oh my gosh, how amazing. I saw on Twitter people were posting like, I didn't like this chain before, but now I really love it. What should I be getting into on like that kind of thing? It seemed a little bit too set up, but yeah, like I said, the chain works. The main problem with a lot of projects now is that they're not really being used. The next thing we're looking for Cardano is what's the word? Is there new constitution thing that they've been talking about launching? But besides that, we haven't gotten any news about, because Cardano used to work a lot with countries in Africa. Haven't heard a word. Or like other like company partnerships. So yeah, Cardano had a DDoS attack. The network is just fine because the chain does work. It's just a matter of money flowing into the ecosystem. And I mean, let's see, July, August, September, around September, October, we're probably going to get another DDoS news thing from some other coins. Oh my gosh, look at how resilient our chain is. Like that kind of thing. So yeah, I think that is going to do it for this video. I do hope that you've all enjoyed. I do hope that you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Do not forget to go outside and go for a walk and breathe a bit and enjoy stuff and not focusing so much on the market. It's okay to, learn what's going on, but don't preoccupy yourselves 24 hours a day with the market. It is going to go back up. It is going to continue moving up. We will see the bull run. The market does not move simply because you're looking at the charts. I had to tell one of my friends that because he was so preoccupied, and I was like, you looking at it isn't going to move the prices, right? Yeah. Thank you all once again for watching, listening, liking. If we get to $500,000 Bitcoin, I don't know what I'm going to do. 500,000 is also this line right here. It's the FOMO intensifies. Thank you all once again, and I will most certainly be talking to you all soon. See you.